So just to introduce myself, my name is Roxy Gwani. I'm the VP of Platform Operations at iFindTaxPro. We are a software company based on the West Coast, and we focus on tax solutions for tax professionals and clients. And we've put together this Tax Talk webinar and platform just to bring together different thought leaders and to keep people who are keeping a keen eye on tax movement, tax updates, tax, and as well as just educational content. So thank you for being here with us. And we're also joined by Stan Sukhinin, who has 18 plus years in investment banking and corporate lending at major global institutions. He's helped develop mezzanine loan products, shape Eastern Europe's financial markets, and he's a former senior partner, managed over 450 million in loan portfolios and leading finance teams. He's a board member, alternative asset specialist, and the founder of Soso, which guides businesses to optimize cash flow and scale. He's also a CFA charter holder. So Stan, the floor is yours, and we'll look forward to your session. Thank you for joining us.
Yeah, so I will speak how to make money and not run out of the money that you then can file taxes with Dmitry, and you will have substance on your income position, and yeah, how to manage all of this. So like just a few things why you should listen to me. I've been working more than 18 years with entrepreneurs, business owners from different kind of size. I used to work in corporate lending, investment banking, now running my own fractional CFO consulting company. And I've just seen like different stories, completely different. I've seen very successful businesses that turns into the bankruptcy in a few quarters. I've seen businesses with over leverage that survive and doing business even with very high leverage, like years and years. And I've seen stories when like great businesses just like turn almost into restructuring, like also like just in a few quarters. And I kind of like see the facts that contribute to the successful business that survive and prospering, and those that kind of like end up in either like just shut down or like completely in disarray. Yeah, and I kind of like share like those main three lessons like that I learned and what I see and what like founders what they doing wrong and when they kind of mistreat like the what's happening in the business and make wrong decisions. Yeah, so the first one is just like it's probably sounds obvious, but like it's what I see like again and again, especially for emerging business owners and entrepreneurs, like when you don't have enough paying customers, and especially like it's like when you alone and you have one contractor, it's kind of like it's hard to run out of the money, like out of cash flow if you don't have enough customers, but you don't have enough like expenses. You can manage this and you can measure it, but like what happens like when the product or service that you're providing is not really strong, you don't really find the right food with this product and you don't charge enough, but you see there's like I don't know number of customers that using it, but like margin is not really good, but you see like you have more customers and you need to scale, like your overhead is growing, and what's happening, you kind of like you kind of have a revenue, you kind of have expenses, but like because you don't really find this product market fit, it's not your, it's either the product or service is not good, or like pricing is not good, or you just like you haven't yet found your ideal customer. Like you kind of balancing on this kind of like in between, right? It's not that you kind of like don't really have any money, but it's also you don't make any kind of additional money. And especially if you end up like your time and your effort, and you're probably working, I know, at least like 9 hours a day, like your time, it's going to be definitely loss-making business, right? After you like just factoring the cost of the time and effort of the business owners. Yeah, and like usually product market fit it's about like startups. I see it's also about a business like just like not innovative, just normal businesses where you don't really find these kind of like right relationships between your product and service and your customers, and how much you should charge, and like, do they receive this value? It's kind of like this triangle between like those factors. So make sure, because like, especially if it's not a startup, if you are not really want to sponsoring like your early revenue growth, like margin should be good in the very beginning. And especially yeah, even if it's something new, it's like it's kind of like your early customers, your early adopters, they willingness actually to pay higher, trying something new. It's like you should have these margins, right? Like I'm talking about gross margins, right? Like your revenue minus what is the direct cost associated to provide your service and your products, right? Like it's like you should really like kind of like see this. And yeah, and then I see like another thing, it's like continuously tweaking the product or service. You're thinking like you add some feature, or then you can charge more, or like but it's like sometimes it's just you don't charge enough. And it's probably why you don't charge enough, because you just haven't yet found your ideal customers. I remember when I was starting, just from my personal experience, I started doing this kind of like a financial consulting. At that time, it didn't call a fractional CFO. And I remember I started working with startups mostly. And like, I know I charged them, I don't know, like 2,000 a month, or like, I don't know, 1,500 a month. And like, I know like they hardly can pay it, and and they like asking like so many things that I should have done for them for this price. And it just wasn't like, and it wasn't sustainable business model. And at one point I even thought like, okay, it's just not really profitable business. But like, what I didn't figure out at that time, it just was the wrong clients. It's just like I need to go upstream. So when I start working with the clients that at least like 2-3 million of revenue, okay, it's like it's a completely game changer. So I charge the price that really makes sense for me. I keep my gross margin, and it's just everything is just put in place, and everything you see, okay, it's in the right place, and then I can scale it. If I would start scaling like this early, my early price, it would be a disaster, because I couldn't find a good people to provide this service. And like my margins would be like, I don't know, 10%, 20% after all. And it's just like, it would be scalable. I could scale it. Like I on paper I could get more clients, but my financial results is going to be a disaster, right? Like it's hardly be break even, and I will work more and more hours, because this more clients, more attention, like more employees or contractors, and so on. So I think it's super important to find kind of like your product market fit before you start scaling. And scaling, I mean, like investing more in marketing, get more clients, hire more people, like whatever definitions for you of scaling. It's how you can avoid this kind of customer growth. Just grow slowly. Yeah, I think it's even like for startups, it's kind of like, I know like growth is everything now, like because of this kind of like VC money now is harder to get, and now people more thinking about like gross margins and profitability and so on. So probably now it's more about profit than it was like 2 years ago, 3 years ago. And just confirm that you have a real paying customers, confirm that you're delivering value, and confirm that the price they pay is enough for you, not even cover like existing costs, but how you will grow the company. Like what else do you need? Like, okay, it's probably when it's going to be 10 customers, you need an account manager, or you need somebody else that just sustain these things. You like, probably right now you're doing some of these things, and you just like at some point you need to step down from those roles. Just put it also in your economics and see what's happening. So grow slowly, make sure that you stick to the right gross margin, and then you can scale your product. Yeah, just like those signs of product market fit, it's like it's more from the startup world, but I think it's also apply to the just business owners, just the normal businesses, not only innovative ones. So it's high organic growth, word of mouth referrals, waiting list, or like high demand, low churn, repeat usage, right, and high scoring and net promote score, just like high loyalty from your customers. And yeah, as a result of this, you will have consistent and predictable revenue, right? So it's kind of like, as you find this product market fit, your financials kind of like will automatically be in place, right? Because your gross margin is gonna be good, your revenue is gonna be consistent, and it's gonna be good, and it's probably your business will grow because you will start getting those referrals, you will start getting like just like word of mouth spreading, right? And yeah, and yeah, customer lifetime value, like how long one customer's working with you and how much in terms of revenue you get for them. Yeah, second, so it was the first reasons why business is actually falling, and the second largest reason that I see, it's like lack. I call it lack of financial clarity, just like lack of any financial foundation when you start your business. So I know how it's happening. Like when you start the business, especially like first time founders, they don't really think about accounting, or they don't think about like set up, like I know, like a software, like really looking for the numbers. They're doing this mental model policy, what I'm calling, when like, okay, I receive like this advance from one customer, and I receive like this payment from another customer, and I need to pay Joe like for this work, and I need to pay like those, I know, fixed payments, right? Like this, and here's my profit. But this mental model policy, it's kind of, it works in the very beginning when you have like 1-2 clients, you don't have like more than 5 expenses every month. It works. Like I'm not arguing against this, but as you increase complexity, as you even you got like, I know, 200K, as you get like, I know, 5 clients, it starts messy. Even if you're working in a really simple business, like I know, as a consulting, like you start getting like these advanced payments, and then you're getting like you need like to pay like your staff or your contractors, and then start messy. Like you will definitely not keep up with all your payments in your head. And like I see like the biggest difference between first time founder and second time founder. It's just like they second time founder, they start business, all of them. I literally, it's just I see it all the time. They start business with like first day of the new business. They just starting like an accounting. They like find someone who will run from the first day, because they already experience this. When it's become messy, it will take so much time, go like through, I know, back like even like 9 months ago, and trying to figure out, oh, I paid this for what, like what was this payment, like, oh, like why I received this, what is it, was advancement payment, or it was like a pay, or it was like for this contract or that contract. It's just like you will spend so much more time just trying to figure out, and sometimes people just cannot figure out, like, right, like Dmitry mentioned like a crypto, and like if you somehow in the crypto sector, like it just like there's no description in your payments, right? Like literally people cannot remember why they send this, and they cannot see who they send this payment for, right? It's just like it just you can just reconcile this. So it's super important to start your first day with accounting. You can run it by yourself if there's not enough means, and but it's just like it's a foundation. And the second thing, like you can't really make any serious financial decisions without financial data. Like it's just like, I don't know, like and you think like, okay, probably like, you know, there's some strategies that really involve financials, like I don't know, IKEA, like from the very beginning starts like say, okay, we'll keep gross margin quite low, we will have some loss making items, but overall because of the revenue, like we'll make enough money, right? You can execute this strategy if you don't follow your gross margins. Like IKEA wouldn't exist if the owner like didn't know his gross margins across all his products, right? And I think even if you're not executing like really kind of like financial strategy is a core of your business strategy, it's still super important, like to managing, okay, what is your gross margin, what is your operating margin, where you want to be like in 1 year, in 2 years, like what do you want to achieve? Like you're offering a new product, it's like cheaper, but you think you will get more revenue. Like you can make these decisions if you don't know like your current gross margins and what's going to be gross margins on those products. And again, back like you can calculate gross margins if you don't have accounting set up in place in the first place. You can make these numbers. It's impossible. Yeah, it's like it's super important. I know it sounds boring. I know like a lot of business mind people, entrepreneur mind people, like they don't really want to spend even 5 minutes on accounting. If you this kind of person, I completely understand. Just hire someone and review regularly on monthly basis, like every second week, what they allocate, what's happening in your QuickBooks or Xero or other accounting software. Just look for this. Yeah, I would say like my kind of base advice. It also depends on the business. I think, like for example, if you're in a construction business, you like I know a contractor for like a construction site. I think it's very important to start tracking everything just from the very beginning. If you like, there like simpler businesses, I don't know, like a consulting, one of them, I don't know, like probably a coffee shop is going to be another one. Ways like you can do it by yourself, or you just like just wait until you reach a certain point. I think like after you cross like 100 or 150K of annual revenue, like you can hire like an accountant, and it's going to be probably 300, 400, 500 a month, or even like cheaper, depends on like how many transactions you have. And then after like I know 200, 300K of annual revenue, you definitely need an accountant. It's like there's no like you should have it in place. Yeah, and if there's a rapid growth, and for example today you had 15K last month, and you like probably see it's going to be like 40K like this month or next month, you definitely just hire an accountant right now. It just yeah, there's no excuse. And there's a kind of like a rule of thumb that your accounting, tax, and kind of like financial function in your company shouldn't be higher than 5-6% of your annual revenue, like up to 7%. But keep in mind, if your revenue is growing, and right now it's kind of I don't know, like a 200K, but you're growing and it's going to be in 6 months, I don't know, 600K. So take 600K, because like as you will hire, as you will kind of progress, it's going to be end up in this kind of like rule of thumb. Yeah, so what is essential financial knowledge? Just like quickly overview. So like revenue, it's just like how much you're making from sales and services. It's kind of sounds obvious, but like I see even like some entrepreneurs makes mistake here and like don't really understand, because like for example, like you receive an advancement for some future work that you should provide to your client. It's not your revenue yet, so you don't deliver service or product you promised, so it's not your revenue. It's just like a kind of an advanced financing, and for the balance sheet purpose and P&L purposes, it's not recognized as a revenue. So, and I see like a kind of founders make this mistake all the time. So direct cost, it's like direct cost is super important. It's like what's this directly tied to producing and delivering your products and services, whatever it involves, right? Like for SaaS businesses, it can be cloud cost and service cost and like customer cost, right? Like for the e-commerce, it's definitely going to be the cost of goods sold of the inventory that they're selling and delivery of those inventory. So it's very important, like what's really tied to your business, and you keep track of this. And especially like I know if you have like many products, many services, different revenues, set them apart, track it separately, that you can understand like what's each part of the business generated. Yeah, overhead is just like what is not really tied to your revenue. Like if you have like I don't know 500K revenue and it's going to be 700 revenue, and those costs like stay the same. So it's usually kind of employees, like just like general employees. I know an accounting service is going to be another overhead, like some utilities and like I know office rent, like all those costs is overhead. And I think another really important important kind of part of the essential financial knowledge is your suppliers, vendors relationships, and what's happening in terms of like your financing. Like like, do you receive a discount? Do you pay afterwards when they provide the service or products, or you pay upfront? Like, how do you manage this cycle? It's really important to track this and keep it in mind, right? Even if you do like a very early this mental model, just remember that it really affects your cash flow first of all. It's like how you manage those relationships. It will like I've seen it all. Like, it's just like you can be like, your revenue can be growing even like on your P&L, like net profit, gross profit, operating profit, all those metrics can be super like high, but you can be like no cash on your bank account. If you have like a very positive working capital requirements in your business, for example, e-commerce is a really good example of this. As the revenue of e-commerce is growing, you need more capital in the business, not less, like, because you need more inventory, and it's just like in absolute terms you need more capital inside your business, right? Because like the cycle for the e-commerce is usually very positive. You need a lot of inventory to sell, and as you revenue grow, you need more inventory, not less, and it means more capital, not less. So it's important that you kind of understand, at least in your head, like understand like those relationships, and understand your relations with the clients. Like if they don't pay immediately after you provide all your services or products, just like, okay, when they pay. And I also, it's bizarre. I've seen like almost every day. I see it's like across all my clients, when just somebody sends like invoices, and they just don't really follow up, and they like stay there for their unpaid like for months, and it's happening like for small businesses, large businesses, and it's bizarre. And it's just like, this is the only one thing that like it will take you only 5 minutes. Just remind your clients just to pay it. And that's it. It just like, and it will make a huge difference on your cash flow, especially if you have like a lot of those dues from clients. Yeah, and the last thing, the third reason why businesses is falling is like excessive leverage. Just like especially in like I see like two scenarios. The one is like when it's like falling really badly. It's kind of like everything is positive, revenue is growing. Usually it's also coincide with the really good macroeconomic factors, and like, I don't know, you're doing like I don't know, like doors for multi-offices, multi-family complexes, and they booming, they growing, and then there's like, I don't know, like a recession, and market is just like, there's no need for like so many houses, and your business just falling. And when you in a really like this growing phase, and you think everything is positive, like, you know, humans being really kind of like, they think it's gonna be forever, and they like, oh, like I'm making these margins, and I'm making this absolute number. I want to extend. I want like to get to new markets, or like I want to expand my team, and they take more and more leverage. And at the time, what I see, like why it's so especially dangerous, like the leverage they take is okay. So they take, I don't know, 4 EBITDA, 5 EBITDA, like and usually low interest rate, and it's kind of like on paper this business can serve, and even some safety of margins, serve this debt and repay it over time. But then when you face like this kind of like a downturn on the market, like there's two things happening. Your revenue is falling, but your margins is falling. So it's kind of like a double. So it's just like pushing you, like your revenue is falling and margins is falling, and your EBITDA usually it's not like, oh, your revenue like half what it used to be last year, and your EBITDA is half of what it used to be. No, your EBITDA is gonna be 1/4 what used to be last year. It's like this rule works like across all industries. I've seen it all. Like it's what's happening, and then you cannot serve this debt, even like paying like interest, and then if there's some principal repayment, you just can't serve it, and it's all falling apart. Yeah, so it's kind of like be very cautious with leverage. They don't take too much, especially if it's like super positive in terms of macroeconomics, and just like be very mindful of the debt, and play scenarios. I would say like play different scenarios. Let's say, I don't know, you lose like your 2 biggest customers. What's gonna be with your financials? Can you still serve this debt? Like what's gonna happen? Yeah, so like I'm not against that, but you should be very cautious, because I think it's the biggest reasons when you over like, I don't know, 1 million, 3 million, 5 million revenue. It's the big, like, other things not really killing your business. Like you can survive, like losing your customers, like I don't know, market shift. You can pivot. You can survive. I've seen it all, but like the leverage can kill you. Yeah, and yeah, super important to keep it low and very mindful, and don't take any debt until you not sort out your financials, until you don't know like your margins, you don't know, like you don't have a proper balance sheet. Like, don't take any debt. It's just like, it's a nightmare. Yeah, as I said, like, yeah, how to prepare for economic changes, just run scenarios, manage debt wisely, and yeah, just and another what I see, like, I don't know, this is some changes in the market, or like in your product, or you're losing your competition to competitors, and it's just people think, oh, and they start running out of the money, right? Like, there's not enough money, they probably don't have enough, like, to just buy new inventory, and they think like, oh, I just need that, I just need one more, like, 500,000, I will solve all my issues, I will buy inventory. And so they just don't working with the cause of the issues, right? Why they end up with less money and they need, but they think, oh, it's just like the money is the problem. It's not the money. It's like usually it's not the money. Like, if everything is okay, you won't think about money, because if you find the product market fit, you know your margins, you grow kind of like really mindful, like, you won't think about money, because there's going to be enough money on your bank account. When you like grow very aggressively, or there's a certain things that you're not really sorted out, then it's issue of the money, or there's something's changed, and then you take debt, you just amplify all the issues you have, because you have more debt, you need to pay more money to serve your debt, not less, and you haven't solved your core issues. Yeah, so yeah, just like summarize, focus on your real customer demand. It's super important. It's just like find your customers, make sure that gross margin is okay, make sure that they pay enough to sustain your business, understand your financial picture, and constantly looking for this, update this, working with your accountant, and yeah, and manage that responsibly, and then you can build what I say, like, is unfollowable business. Yep. Thank you very much. Really appreciate it. Yeah, happy to answer any questions.
Wonderful. And then also, please follow iFindTaxPro on all the major platforms at iFindTaxPro. And please do comment, like, and subscribe to our channel.